broadcast is now starting. All attendees are in listen-only mode.
TGIF Warriors. Everyone survived the rock and roll week we had. ECB, Fed. I know I didn't do much after the ECB yesterday. Could not chase the dollar rally. Everyone doing okay. A few of the ideas after the Fed work, like buying the break in the bonds and the yen for this trade. Kind of strange. The yen has all the strength. It's BOJ last night, but we broke 50 off it and we retraced 61.8. Maybe a shot, like to see it back inside this formation. If we get 1.618 of this 50 pip move from 61.8 back on this, could take us right to this trend line. And this recovery in the yen has a wedge look to me. So breakdowns under 110. See what happens. Actually, a pretty good week. Could get another stab. Here's one, here's two. Could get a 3 into early next week. Everyone with me on the yen? So we were the team we were discussing some clandestine type of stuff, that goes on in the industry. So I want to dedicate this to Grega Horvat. I don't know if you could hear me, Grega, and to the rest of the team. You guys tell me if you remember this, all right? There's a man who leads a life of danger. Everyone he meets, he stays a stranger. With every move he makes, another chance he takes. Odds are he won't live to see tomorrow. Secret agent man, secret agent man, they're giving you a number and taking away your name. Okay, that's my tribute to the CIA, KGB, FAZ, NSA, the people spying on Trump's campaign, James Comey, all those guys, Julian Assange, all those people who live in the dark recesses of the world that know all the secrets. And let me remind you, if anyone's trying to sell you this, if you give me $5,000, I will teach you the secret of trading. You got to run away, because I think everyone in here knows the secret is there is no secret. It's hard work, it's perseverance, it's living through adversity. It's all in your head. It's about getting the psychology. You could use, candlesticks or Elliott or Gann. I don't care what the method is until you get your head straight, which took me, I'm still working on it. You're always working on it. Don't think that you ever can just relax, because then you just slip back to all your old paradigms. So I want to thank everyone for hanging out with us this week. This was a good week to test if your broker's platform was successful with all the air pockets and spikes in the market. And, there's no law against having more than one broker. In fact, I think it's an advantage to have more than one. So if you're looking for another or a replacement, call Trent at Forest Park FX and talk to him under the apple tree. And guys, we had a team meeting. And if they're like that, okay, maybe Steve will show it. So that's my the only new thing. Usually don't recommend doing things on Friday, but S&Ps are trying to recover. They're always trying to recover, but the bonds behaved well, and they still are. So here was the Fed spike. Now something else we talked about in here is fade the Fed and the bonds. So, you know, you could have done it in TLT or bond futures. And what's interesting is the bonds rallied pretty good. Here's TLT. Okay, so this was the Fed. So you had a chance to buy them like around 18 and a half, 1860. You already have a pretty nice lead. And I'm looking for this. But what surprised me is with the bonds rallying, US dollar yen went up too. So maybe it's just a short squeeze. It's hard for me to imagine if this is right and we're going to penetrate these highs, there's not another break in US dollar yen. If you don't have to agree with me, give me a Y if you understand the rationale and the correlation. And congratulations if you did it with TLT, your options on TLT or bond futures. That was really one of the trades of the week. So I'm thinking maybe they reconnect US dollar yen, especially if we get risk off. You know, we get some more risk off and maybe the market doesn't recover. I know every day you look at the S&Ps, you know, they sell off, they recover, they sell off, they recover. We're diverging here pretty good. The only thing that makes me think there could be one more push is I've been talking about shorting NASDAQ up around 73. We almost got there. I mean, close enough, 73 and a half. So, you know, it may not be completely done. And some intelligence gathering, Peter Brandt, who's pretty good, is looking for much higher numbers than I am. So that's what I have to share today. There is a rumor in the air the prices are going up, I think, sometime by the end of the month when the new platform is launched, not for people who are current subscribers, but for new subscribers. So if you've been on the fence, it's time to jump off the fence so you lock in current prices for the rest of your trading career to hang out with us. How you doing, Blake?
Hey, good morning, Dale. Happy Friday.
Yeah, it is happy.
Yes. It's Friday. Yeah, it's Friday. It's you know, we just there's just some news that you know, U.S. just said to pursue more tariffs if China retaliates. That's what Trump says, and you know, markets are getting a little jiggy. The bond market started to firm up on that headline. Dollar yen just came down a little bit. Now, you were wondering why, you know, bonds rallied and yields came down, and you know, the dollar yen rallied, and the reason why the dollar yen rallied is just we had overall bullish dollar moves yesterday. I mean, it was like it was across the board. So
sympathy type move.
Yeah, it's like it's hard to stop, you know, the dollar
Yeah.
just making gains. I mean, making gains everywhere. Now you know, you take a currency pair like the dollar yen that was down so significantly. I mean, the dollar yen, you know, rallied, you know, what, 30 pips when the euro dropped, you know.
Yeah. Well, look at this. I mean,
we went.
This is a 4 hour, and look at, you know, how do you get on a move like this? We were talking when it was, you know, happening, and I don't know. I've never been able to launch after, you know, a couple of candles like this and just say, okay, I'm buying euro or I'm buying the dollar, you know, after a 68-point rally.
It's really tough to do unless, you know, and I have a very, very difficult time doing that as well. Yesterday, though, it didn't stop me getting long the dollar Canadian because I knew we were breaking out of a, you know, weekly triangle. So I had to, you know, at some point you have to just say, all right, I have to get in, you know, and kind of inch my way in because you know, it's such a massive move. I mean, you can see the dollar Canadian's breaking out of a big weekly triangle, and we put in a pattern in play as a result.
Nice.
Yeah, I mean, but I myself had to chase that one higher, and I don't like to chase, you know, but at the same time, you know, even though we rallied 100 pips, I had to get in, and I ended up, you know, buying after being up
Do you
100
hold
pips.
your nose before you click?
I did, and you know, but you have to inch your way in. I can't go in with a full size position when you know it's a big breakout, but you know it's such a big move. You know, you have to. I literally have been getting, like, if you go to a 4-hour candle there, since like 30. Well, here, I'll pull it up. Let me pull over the chart here. Oops, wrong chart, wrong screen. My bad. Excuse me. There you go. Okay, so yeah, if you take the 4-hour chart of the the U.S. dollar Canadian, I was like literally buying through here, and I'd have to just inch in. You know, I'd have to buy a little bit. You know, we get a pullback. I bought a little bit more. Last night when we were, you know, we were in the just above the 131 level, I had to buy a little bit more, you know, because it's just, you know, you can't get in a full size position when you know you're basically chasing the market higher. But at the same time, hold on really quick, this volume is really loud. Okay, so at the same time, we knew it was a big breakout. I mean, this is a multi-year breakout. I mean, the highs from 2016, we broke this trend line, is big. So you know, I had to, and then knowing that we're gonna you know, implement some tariffs in China, and then the NAFTA negotiations are all gone sideways. You know, it's one of those things that we had to do, but it's tough. You know, you want me to I know a lot of traders out there, they get frustrated with themselves, Dale, and their trading. Have you ever been like super frustrated in your trading, Dale?
Yeah. Oh yeah.
You want to hear how good of a trader I am?
Yeah.
You want to hear what I did yesterday, right after I came off of air with you, and or actually this is yeah, right at the interest rate decision. Oh no, I guess it was I probably explained this to you guys yesterday, but for those of you that didn't hear, this is how good I am. I shorted the euro dollar at 118.38. I closed it at 118.28.
I knew you were going to say that.
Yeah, that's how good I am. That's that. So if you because
I tell people though, you know what, Blake, you know, and we all do it, but just like you have to be patient with the market, even after all these years we've all been doing all of this, it's more important to be patient with yourself and not get too upset about these things. You know why? It's not good for your health.
oh no, I mean
Yeah,
but
you know
the
what I
reason
mean?
why I want to point it out really is because I want you
You
guys
don't
at
walk
home.
on water, no one does.
No, you know,
Yeah.
I get stuck in bad trades. I get stuck, you know, I get stuck fading the market, and then it runs over me. I miss, I take profits too early. Like,
Yeah, me too.
you know, like I mean,
I make the
literally,
tough money and then watch the windfalls a lot.
yeah. I mean, if I would have just, you know, just stayed off the keyboard for 30 minutes, I mean, I would have made 100 pips. So you know, it's hard not to beat yourself up in those types of situations. But I just want to explain to you guys that it happens to me too. And I've been doing this I started in trading in 96. I started in the business in 95. So I mean, you know, it happens to me. So
Blake, that's 10 more pips than I made on the trade. So well done.
hey, thanks. You know, but
Hello.
you know, you know, and it's just,
That's
you know,
a good point from a pro too. And you know what? It's better than people that were long and scaling in all the way down too.
yeah. There's I had people tweeting me, you know, as you know, the move is happening. Like, I'm staying long the euro, I'm getting long here, and I'm just like, whew, good luck. You know, I tend not to respond to people like that. I don't want to make them look bad or feel bad. It's just you know, I look at you know, these moves are just massive. The good news is for me, and for I think most of the people in the chat room, in our Forex Analytics community chat room, we weren't trying to fade this much, and I actually ended up buying the euro once yesterday. I think I bought it down here, somewhere around here, and I picked it up for like 10 pips, and then I was like, I felt good. Maybe I think I made more than that. I might have made like 15 pips as we dipped below. Yeah, we dipped below 116. That's what it was. The original dip below 116, right down here. We went to 115.80, some like right around here, and then I sold it, and I was like, I was very happy that I did. And I remember when I did it, and I was like, okay, I'm done. You know, that's I got lucky. I'm you know. Oh, and then also it was the double top completion. I think I picked it up. I think I picked it up twice yesterday. I did. Let me make sure I got my numbers right. Yeah, I think I picked it up down here on this bounce, and I picked it up below 116, and then I made money, and I'm like, you know, that's, and very little too, not like anything spectacular, but I have shorted it like 3 different times this morning. So on this rally, so you know, now I'm just trading it in the direction of the trend. You notice how we've rejected previous support that's acting as current resistance. So I think the euro is going to trade heavy. You gotta imagine a lot of the we could call it fast money. I call it fast money because everybody that was buying the euro dollar through here, you know, that was like they're more of like a swing type of position trader looking to stay in for the next couple of weeks. There's a lot of people buying the euro dollar through these levels because of, you know, the ECB was supposed to start talking about tapering bond purchases, which is a real big difference when you go, okay, I'm going to start tapering bond purchases like soon, like here within the next, you know, couple months, versus the ECB is going to stay on hold till summer of 2019, then, you know, start to taper. It's a big difference, and that's what really crushed the euro. So now you have to imagine that this euro dollar, even if we get some sort of recovery, maybe back towards 1650, this is going to be a shorting opportunity. I would imagine if the euro does anything, it's going to look like that. Now maybe it's short-lived. You know, maybe we have what you're seeing here, and we end up, you know, bear flagging lower like that. I don't know. I am scalping it to the short side here, but I wouldn't put it past us that we get towards this 116.50 level first before reversing, because the dollar has had such a big move. And one of the things, and if you don't know why the euro has bounced this morning, the reason why the euro is bounced and the dollar is down slightly, not a lot, but slightly, is because the U.S. has announced that we might have an additional 100 billion in tariffs with China. So the market is not too keen on that from a macro standpoint. Yeah, what's up,
Sorry to interrupt. There was a headline a few minutes ago where it's 50 billion of Chinese goods on high tech and some other industrial products, 25%.
So is this the additional? It's 50 billion and possibly another 100 billion. That's why.
Okay.
Yeah.
Sorry, I missed that. Oh yeah. Okay, maybe that's it.
Yeah, that's why that's why the euro actually bounced in European trade. So, and that was announced. I have to go back and look at the article, the notes that I was reading from the bank. But yeah, that's what they're blaming this move. So what probably happened is when that headline came out, the euro actually spiked down towards 115.40, hit new trend lows, and then reversed. So So I think that's what happened overnight. And again, I wasn't around, so I'm just.
I am personally, and this is my opinion, I'm personally very, I find it very difficult to be bullish either the euro or the dollar at the moment for different reasons. And the euro in particular, because I think, you know, the move of the ECB yesterday was a very significant one. And also the fact that they revised the GDP forecast lower. And for the dollar as well, because, you know, trade wars usually turn into currency wars, and it's I've been looking at euro dollar and I just don't know which way to trade it, because I'm bearish both currencies. But
well, then you know, there's a lot of people like in our chat room that are just trading crosses now because of that same dilemma. You know, it's like, okay, what do I do here? And I think it's a tough call. However, the one thing that I have to say, Stelios, is I think that the market got like I said, the fast money got very long the last week and a half, expecting the euro to trade up towards 120 or the 200-day moving average on all this like ECB taper news, and they got caught off guard. And so that move down yesterday has really neutralized the market. So I think that we are in a situation where it is a tougher call now.
Yes, I agree, 100%.
Yeah. So I guess you know, I'm with you. I'm looking at let's fast forward a week or two from now, and let's think about the impact of how the tariffs are going to really start to impact our relationships between China and NAFTA between Canada and Mexico. I think you can look at some of these currencies like the Kiwi and the Aussie and the Canadian, and you can already see the peso has been obviously rallying or selling off quite aggressively. But those particular currencies might be the underperformers moving forward. I mean, you know, obviously you've got the Aussie dollar, which, you know, has broken, in my opinion, some really key, you know, support over the since yesterday. But we're also maintaining this big move underneath this multi-year trend line. So, I mean, you think about like a trade war with China, who's going to suffer there aside from the U.S. and China? Probably Australia, right? Wouldn't you think that, Stelios, considering that
yes, yeah. I mean, Australia, exactly. Big dependence on China. It's I agree 100% on that. Yeah.
But the flip side is, could the strained relationship, excuse me, really quick, the strained relationship between the U.S. and U.S. and China, could that actually end up benefiting Australia, where China starts buying more Australian goods? Is that a school of thought? Is that a valid school of thought?
It's a possibility. It's just I think it's so many moving parts. It's very difficult to predict what's going to happen. It could.
I think that could end up being like a much later reaction, Blake. For the
like
time
a
being,
longer term reaction.
Yeah, and depends on how things go. But I think that for the time being, it should only act negatively, as you mentioned. That's my personal viewpoint.
All right. Well, since I have you both here, and I know Stelios is a huge silver bull, and like I said, I picked up some silver over the last month and a half. China is said to prepare state support for HNA. Oh, okay. Wow. That they're really. Oh, wow. That's a big deal, actually. That's a big risk off type of deal.
Yeah.
That
you know
like,
what
hey, we're going to support you from going out of business, right?
Yeah. I think the most important chart on the board right now, when you're talking about equities, risk on, risk off, is the XLF. Pull it up if you have a chance. And this is why I believe the market's unhealthy. We've had this huge recovery in the market these are your big banks, and you have a descending triangle. XLF is on the verge, you know, under 26.5. It's going to look pretty bad. Could go to 23.
Yeah.
And it's already challenged its February lows a few times. Okay,
What are
even
you talking
come
about?
off.
I'm going. Oh crap! Hold on. I accidentally just got limited into the euro dollar. Hold on. I forgot I had a limit order to take profit, and I just sorry, I just had to get out of it.
Anyway,
but yeah,
sure.
what are you talking about? I just went long Deutsche Bank.
Okay.
I'm joking. I'm joking.
Well,
I'm totally joking. I'm totally joking.
Yeah.
Stelios
Anyway,
is
it's
on
30%.
Deutsche Bank. He actually put half of his retirement in Deutsche Bank, right?
No,
I'm just
not
kidding.
even close.
I actually haven't looked at the stock recently, but oh my god, oh my. Ooh, that's
very close to all-time lows, and there's a big trend line.
Looks very healthy, doesn't it?
Oh my god.
Know, there is a very interesting fractal with Deutsche Bank and Lehman Brothers stock. Very interesting fractal, actually.
Good comparison.
I could see it, and let me say something about this. When you have a company that has not been able to thrive in this environment.
My question is exactly what's going to happen if we go to the next crisis and they're still trading there?
Exactly. I mean, you take a look at let's just pull up a couple of U.S. bellwethers. Here's Bank of America.
They're said to have the largest derivative book on the planet.
Yes, that's true.
Even from the last recession.
I mean, here's Wells Fargo. I mean, just look at like its U.S. competitors. You just see the big difference. That just shows you the exposure that they have. And I don't even look at this stuff. That just shows you the type of exposure they have on their books versus what Wells Fargo and Bank of America. I mean, that's the way Deutsche Bank should have been performing in this environment, in this low yield world awash of money, quantitative easing, state that the entire world has been in, and Deutsche Bank has not been able to perform. That I could see that fractal, Lehman fractal, and without even looking at it, being very, very, very relevant. Anyway,
there were some rumors lately, Blake, that there might end up merging with Commerzbank. It's the second biggest German lender.
That's a solution. Merge two sick banks together. Nice.
Yeah, there you go.
Yeah.
Exactly. All right. Well, hey, about 2 minutes before we have some news coming out, we have trade balance. I think a trade balance. Hold on. Let me double check that. No, foreign security purchases out of Canada, manufacturing sales, and Empire State Manufacturing, all coming out in just a few minutes. So
yeah, but the vast majority of them second-tier data, and really after all the event risk we had this week, Blake, I doubt that they can actually, change direction to the market or something like that.
Yeah, well, I got to be around for it. So hey, you guys,
TGIF,
thank you all for being part of the FACE community. Thank you all for your support of ForexAnalytix. For those of you that are subscribers, and make sure you visit Forest Park FX, our wonderful sponsor of this this webinar. So hey, thanks guys.
Thank you, Blake. Hey, Dale.
Hi, Steve.
I'm good, mate. I'm good. How have you been?
Good.
Some amazing moves transpired yesterday, right?
Yeah.
Yeah. Now the question is, what happens from here? What happens from there is that I think that without any doubt, the Euro USD satisfied the minimum criteria, of a recovery, especially with the spike higher that we had yesterday collapse. And to begin with, I do think that Euro USD is headed to new lows. Perhaps it's going to even break 114.50. Why not somewhere close to the 113 area? Why do I say the 113 area? Because if I zoom out, you can see that we have this broken channel, this broken blue descending channel. Let me highlight it, this one, right? So the broken channels resistance that might act as support is coming as we speak, close to 113. Stelio, did you want to say something?
I want to say Empire State was stronger, quite a bit stronger than expected.
Yeah, 25 versus 19.1, right?
Canadian manufacturing sales missed quite a bit
Very
as well.
bad. Yeah, they missed quite badly actually, minus 1.3 versus 0.6 expected. So let's have a fast look what's happening with the USD CAD. Not much actually. USD CAD, Blake showed it before, already broken above this descending trend line. It's also penetrating through this confluence of resistance is at 130, 130. I think without a doubt, the next upside target is roughly at 132.80. Why? Because we have a confluence there of a horizontal resistance area and this ascending channels trend line resistance. So I do think that USD CAD is headed there. I even mentioned it yesterday that if we break above there, the next stop is going to be up there. So I do think we're on our way, and one way or another, I do think that this level is going to print. We are also another little detail in this chart. As you see, the RSI that was finding resistance in this trend line also seems to be finally poking above it once again. So I do think that the RSI is probably on its way to print over both levels. It's not there yet. It's roughly at 66. So why not, push higher towards 75 or whatever. So I do think we should get up there. Now, having to do with the euro that I was saying, we satisfied the minimum requirements. I was lucky enough that I got limited out on half of my position with a decent amount of profit yesterday. I had to close the rest of it with some loss, obviously, because once you get that kind of a candle and it starts accelerating and it's not stopping, and especially when you have some background for that happening, we got a much more dovish statement from the ECB than I would have imagined, in all honesty. And we got Draghi that actually didn't even try to mitigate, to moderate a little bit the dovish message from that we got from the ECB. So in essence, that got Euro being on a free fall, and that's why I also think that there is absolutely no reason for the Euro to recover immediately. I do think that it should remain weak for some more time, and as I said, 114.50 is the next level, but why not even retest this channel that currently passes from 113 before looking at a big recovery. Okay, so in all honesty, I had a plan to be long Euro, and that luckily worked because most of my because half of my position got actually limited out just for 2.5 pips yesterday. I'm also a quarter long the cable, which is holding better, and I'm gonna hold on to my quarter of a position long and cable, and I'm gonna buy more lower. I have to tell you, I don't have any more position in the Euro USD, but I'm gonna hold to the cable one. My plan to sell higher obviously didn't manifest because we didn't get much of a bounce, but I do think that especially in the Euro, we should be selling any recovery. I think Blake also mentioned that 116.50, 116.60 is a decent area of resistance. But what I want to show, that I showed it to the chat room yesterday as well, is that I think that we have an even cleaner setup. I mentioned it a few days ago as well, when I cautioned that USD Swiss is likely done correcting lower. And yesterday, I mentioned when we were about to break above this trend line that, I put out an intraday analysis saying that we're breaking out. I do think that we're now on our way to 102. So I'm going to be actively looking to buy the USD Swiss with a target of 102. Within the next few days, any type of pullback we get in the USD Swiss, I'm actually very interested in buying it. Now, obviously, we also got a very nice move down in the Euro yen, but I have to say that it remains quite mixed. Obviously, we can see some more follow through. Yesterday's candle was a very big candle. I said that I maintain somewhat of a bearish bias as long as we remain below 131.50, 131.70. But I have to say that still, that would not be my preference to be getting involved with the Euro. As I said, probably my preferred Euro trade doesn't even include the euro at the moment, is USD Swiss. We know though that it's extremely highly correlated to it. Now, let me show some of the crosses as well, because I also pushed some intraday analysis yesterday, quite early actually after the reversals. Euro Aussie, very, very big rejection, huge outside black candle. I think that this signals that we have more downside coming, and another push towards the 152 area, quite likely. I'll probably gain some exposure here as well. And then we also have the Euro Kiwi, got a very nice rejection from retesting this broken ascending channel. I do think that there's more downside left for this as well. So there is actually no real area of support for quite a few hundred pips. So as long as we remain below this channel, I think that looking lower is probably the way to go. Now we also covered USD CAD, but what is also important, and I also mentioned it yesterday when we were testing it again. I do think I was maintaining a bearish bias in the Aussie USD. I said multiple times that for me this looks like a bear flag here. Yesterday I also mentioned it when we were about to test the 75-cent area in the chat room, that be careful, because actually Aussie looks like it wants to break lower. And actually we did get that move. We did close also below the 75 cents area. In my opinion, the pair is now on its way to 73 cents, 73.3 cents, somewhere there. The next stop is around there. So Kiwi, not there yet. I mean, Kiwi hasn't yet confirmed a break lower, but this is likely also a consolidation, right? So I do expect that Kiwi will most likely follow to the downside. Regardless, between the two of them, and I've been saying for several days, I would rather be short the Aussie. So for me, there is no real dilemma. If I'm going to be selling the Aussie or the Kiwi, it's going to be the Aussie. Now let's have a look at the equivalent pairs against the yen. Same deal here. I said that I'm viewing this as a bear flag as well in the Aussie yen. So more or less the same type of formation going on here for the Aussie USD and the Aussie yen bear flags. We're not there yet. I mean, we're not breaking below it yet, but I do think that it's a very, very high likelihood. And equivalently, Kiwi yen got rejected from a nice level, but it's more mixed, and definitely between the two of them, I would be selling the Aussie yen, right? Let's have a look. Another way to see why is having a look at the Aussie Kiwi. As you see, we had a very nice recovery towards the 61.8. This seems to be failing. I even see it accelerating lower. So as long as that's the case, this is something that points to more weakness expected from the Aussie than the Kiwi. Now, having to do with the USD yen, Blake mentioned it before, and I have to say once again, we saw a lot of dollar strength coming in yesterday through most of the FX pairs, but obviously the USD yen has been benefiting the least from that, right? And so far today, we're also seeing like a shooting star. So I do believe that the chances are that, especially if we get some kind of a risk-off move, the USD yen is going to be suffering. So I wouldn't be long the USD yen, at least for sure, not unless it breaks above this blue descending trend line. You can see how many times this descending trend line has been tested, and every single time we failed. So as long as we remain below it, and I see this type of a structure and behavior, I would, if I wanted to gain some exposure, it would be short rather than long. Now, having to do with metals, actually, let me show you a couple of more pairs. One is, I'm not regretting for abandoning the rest of my USD NOK. I took profits on the first half, and then I was patient while being out of the money, and I got rid of the other one at break even because I really didn't like this kind of a structure. Yesterday's candle is a huge bullish engulfing. I wouldn't be liking this price action if I was still short, which I'm not. I have no exposure at the moment. I would be quite troubled actually, and at the best case scenario, I would remain neutral for the time being. I'm not saying that somebody should be long. I am definitely not going to be buying it because my macro thesis would tell me that eventually it's going to move quite lower. But on the other hand, from a technical perspective, I don't see the reason why I should be short at the moment. And this is also USD SEC. USD SEC, very nice reversal yesterday. This is what we had drawn, but we had a much stronger recovery from there. It's currently testing this broken trend line as resistance. Let's see if it's going to fail here. But once again, I'm going to say that I wouldn't be having a position here at the moment. I mean, I do think that it might push lower once again, perhaps towards the 850 area, which is what I had initially drawn. But still, I think there are better opportunities out there. I'm mostly neutral. Regardless, a very big move yesterday, which we need to respect. Now, having to do with risk, obviously we're seeing a little bit of a pullback, perhaps due to the news we have on the tariffs, on new tariffs on Chinese products. Definitely, trade wars are not risk positive in any case. But I'm not seeing anything that would really change here my bullish thesis, right? I still maintain half a position long on my S&P long from 2720. I actually took profits almost at the high a couple of days ago on half of my position, and I'm going to be keeping the other one. I had to abandon though my long position yesterday, and thankfully I did it. My short position, thankfully I did it quite early, because when I saw the euro weakness coming through the market, I knew that the probability that DAX was actually getting rejected from there was quite low. So I cut off my 1/4 of a position short on DAX with a loss. And as I said since the beginning, I think that the FTSE looks a much better deal. And today's price action tells me that FTSE is probably the place to be if you're looking for one more leg lower. That's it more or less with risk. Let's have a look at the yen, the Nikkei as well, because I just want to show here that 23,000 has been retested, but on the other hand, it's still holding. I'm not seeing this rejection so far, taking some kind of real bearish characteristics. For the time being, it looks like a consolidation up there. So as long as 23,000 is holding, there is always the possibility, of seeing another push to the downside. But definitely, you don't want to be short the Nikkei if we do make it above 23,000. Okay, I have no exposure here, by the way. I'm just mentioning it. Now let's have a look at the metals, and afterwards we're going to go through looking a few of the questions.
They've been very resilient given dollar strength, right? They've been holding up quite well.
Yeah, especially silver, but gold is definitely not looking that good, because yesterday it was looking like it would be penetrating through the 200 EMA, which we said how important it is. But it reversed course by the end of the day. The long upper wick that we see in the candle is definitely not a very good omen for the bulls, and today's continuation lower maintains the possibility that this, I'm going to mark it here, that this is some kind of a consolidation which doesn't look bullish to me. So, if we see a break below this trend line, I wouldn't be wanting to be long gold, because in any case, I think that would actually open up, the downside, and it could produce one more leg lower towards the 1,260 area. On the other hand, and Blake said it yesterday very rightly so, let me show the weekly actually. He said yesterday that, listen, I like silver to the upside, and how many times I've said that myself, for weeks and weeks. But from a reward to risk perspective, being short right on this trend line, you can also see how important it is on the weekly chart. Makes sense, right? And it does make sense. Now, on the daily chart, you can see it also depends on how you want to draw this trend line, because if you take into account this week, it's like that. Now, on the other hand, if you want to draw it a little bit differently to pass from there, we are on a resistance, but it doesn't really matter because what matters here is the following. Silver does look stronger than gold does. There's no question about it. So if you want to be long one of the two, it has to be silver. But for sure, it hasn't been breaking out yet. It seems to want to do so, but it's not confirming, not yet at least. So, I'm paying very close attention to it. By the way, here is also palladium. I have to say that if palladium breaks below this channel, I think that it's going to produce one more leg to the downside. I might actually even sell it because I have a bearish count here in view, and this is also platinum, which definitely hasn't been pushing higher, hasn't been confirming that this is a descending wedge that it's actually breaking above at the moment, because if that was the case, we should have seen some acceleration. So I think we need to remain more patient with metals, right? Definitely silver the strongest one, and that, as I showed yesterday, the gold-silver ratio is also making a historic move to the downside, in which case, here it is, right? Penetrating as we speak through this trend line, and that's going to be a very bearish development. And usually we know that when silver overperforms gold, first of all, metals do well. Second of all, since we've been in a prolonged period since 2011 that gold has been overperforming silver, as you understand, even if this proves to be like a corrective move lower, it can actually extend quite a lot to the downside. So you need to respect that, right? And as you see, the past few days have actually started looking more and more impulsive in this cross between gold and silver. Okay.
Nice. I like that chart. Nice.
Yeah, it is good actually. It is good actually. Let me see what kind of questions we have. Black's the best, can't always be perfect. Yeah, that's the case for everybody. I mean, you're not a good trader if you're perfect, because simply there is no perfect trader and no perfect trading. It's all about consistency. It's all about being right more often than you're wrong, or at least being right more or less as often as you're wrong, but maintaining a healthy reward to risk ratio, in which case, even if you're half of the times right, you make more money than you lose. Also look bad. Summit is showing us. Let me see what you're sharing with us, mate, and then I'll show it. It's asking me to sign in to some kind of a it's a picture, but it's asking me to sign in to be able to view it, so I can't do that because it's a Slack. Thoughts on EuroCAD? Yep, let's have a look at EuroCAD actually. I showed it yesterday as well. I think that as long as it stays below this broken trend line, we actually retested it as a resistance and we failed. I think that as long as we remain below here, it has the potential of accelerating further to the downside. I also do think that today's recovery that has brought it up on, let's go down to a 4-hour chart, and you're going to see, as you see, we're testing these lows, which might act as resistance. So I do think that even, if I was a scalper, I would actually be considering perhaps selling it here, right here, right now. That's not my trading style, but it does look like a decent proposition. Okay. Regardless, though, I have to tell you something, and that's quite something important, which is the following. Usually, it's a good idea to be trading a currency that you consider to be strong against the currency that you consider to be case. Lately, both the euro and the Canadian have been weak. So, as a general rule, I would probably be looking to trade something different. I mean, I would probably, let's say, trade euro, which is weak, against something that I consider being rather strong at the time, and not against something that I consider just be less weak, right? Now, one more thing I wanted to show, it's the DXY. DXY finding resistance once again at this 95 level. Let me draw it here. You can also see it. There it is, right? Obvious area of resistance. But I do think that after yesterday's candle, even some type of a pullback, let's say we have some type of a pullback from here, something like this, I think it should eventually find buyers, and I would be expecting another push higher towards at least the 50% fib from the 2017 high, or even higher, actually, this support resistance area at 96.40, 96.50. Okay, so I do think that it would be a big mistake ignoring yesterday's huge outside white candle and believing that it's a one-off thing. I do believe that there's more strength coming in. Absolutely no problem, mate. Anyhow, it's Sunday. It has been quite a quite a full week, so it's absolutely okay. Okay, what else we have? USD yen looks very weak today. I'm surprised this year no one says anything about selling may go away, especially in the context of Fed raising rates. I agree with you, Stephen. I mean, first of all, I said before that indeed USD yen is probably one of the weakest crosses of of the USD at the moment. So that's one thing to notice. And despite seeing quite strong risk on appetite lately, right? So that's a thing, and especially if we see some risk off coming through, I do think that USD yen is going to suffer quite a lot. Now, having to do with you're not seeing many people actually looking lower in stocks. Yeah, I think that's probably more or less an accurate description of what's happening. I also don't see a lot of people being that much bearish. And yeah, usually that can act as a contrarian indicator, but I have to join the crowd here and say that for the time being, at least in the short term, I'm also not seeing something very bearish with stocks, right? I do see a price action that's cautiously bullish. Okay. And on the other hand, I have to say one more thing, because you can also look at the flip side of the other side of the coin, which is I also don't see many people that are like enthusiastically bullish. So it's not that I see euphoria in the markets, right? So you're right, not too many people being very bearish, but on the other hand, definitely, we don't see much euphoria in the markets. Nothing close to what we had in January, if you remember, that we had started seeing articles about S&P being at 3.2 thousand, by the end of the year and things like that. So I think that the sentiment is more or less balanced lately. Okay, it can be towards bullish, but come on, this has been like a 9-year bull market, right? So having your main thesis being at least slightly bullish makes sense. I mean, it's just following the trend for the time being. Good question. Let's have a look at the bonds. Obviously, the bond benefited greatly from yesterday's dovishness from the ECB. Actually, we were looking perhaps for some kind of a bounce. This happened I was expecting that could come from the 61.8. It actually came from the 78.6. So this looks fine for the time being. I honestly don't expect this bounce to go all the way and actually break above this formation yet. So I would be very cautious in being long above, let's say, 162.70, because I think one more leg to the downside is still a probability, despite seeing a very dovish ECB. Now, let's also have a look at the ZDN and the 10-year treasuries. We're seeing a very nice bounce from the broken wedges resistance that is holding nicely as support, and I think that as long as we stay above there, another push to the upside looks like a very nice probability, right? And as we were saying also yesterday, when we were quite at the lows, from a reward to risk perspective, longs there look extremely appealing. Now, a very, very fast view on Bitcoin and Ethereum as well, because I need to stress out that Bitcoin is currently testing a very, very significant support area. You can see here how significant it is. I do think that if it like establishes itself below 6,500, that's going to be a very bearish development, which might bring a lot more downside. And Ethereum is still some distance from there, because the equivalent level, in my opinion, for Ethereum is like closer to 400, perhaps a little bit lower than 400. But in general, I have to say that cryptocurrencies look very ill. Has anyone considered silver? Yes, Elio?
Sorry, you're going to take a question because there's one addressed to me, and I wanted to ask that as well. To
Absolutely.
answer that, sorry. By the way, Dale has just said that the guest has unfortunately cancelled. Okay. So there's our friend Bill is saying if my sterling narrative has changed, and the answer is no. And what do I think about sterling? Do I think that the UK is going to be, outperforming economies and all that? No, I don't think so. But I always look at what the market's pricing, and what is the market telling us right now about the UK? It's telling us that there's huge uncertainty because of Brexit. We know that, we've known that for a while, and as a result, sterling has taken a huge hit since the referendum. We know that the market's pricing in big uncertainty in terms of government, in terms of political strength of May's government. We know that the market's pricing in continued uncertainty in terms of the economic data. But now that's been relatively mixed. We've had some, some misses like PMIs, but we've had some, and also inflation, wage growth are not going up, but they're still at like 2.5, 2.6%. That's higher than a target. We had retail sales, which beat massively yesterday. So I think economic data is still not doing badly. So my narrative, my thesis for sterling is still constructive. I still like being long sterling, not because, as I said, I think that the UK is going to have a stellar year ahead or two, but because I think that a little bit too much is already priced in. And I personally think that an agreement with the EU is going to be made. How good or bad is it going to be? It's probably going to be a compromise for both sides. It has to be. Both. The UK is a huge economy. It's in the interest of both parties, I've said this many times, to have some kind of an agreement. So based on what the market's pricing, I like being a long sterling against currencies like the euro or the Kiwi, and also against the dollar, not at these levels, maybe a little bit lower. I think recent lows are about, what are they, 131 or something like that. Somewhere there, I'm going to start to look getting long sterling cable. So that's my view. I still stick with it, and I've been bullish sterling for the last year or so. How long has it been? And it's done okay so far. But as expected, there is going to be fluctuations. There are going to be ups and downs. You can't avoid that until we get this one big headline at some point, which is going to be very constructive in terms of the negotiations. And then I think it's going to be just a squeeze higher. That's still my opinion. Obviously, I've been right and wrong in the past. That's what I think about sterling.
Yeah, but you're mostly right. I mean, the people that have been listening in for a long time, and people in that are subscribed to ForexAnalytix, they know that you're more often right than wrong. And as I was saying before, nobody's perfect, and nobody can always predict the right direction.
Exactly, and it's very difficult, like you have said many times very correctly, Steve. It's very difficult to time the market when you look at things from a macro aspect. It's very difficult. So I've been long Norway for ages, and it's been going sideways, and at some point it's going to break. But it can be very frustrating, and you need a lot of patience when you look at things from you take a few steps back to look at things, because it's not an immediate thing. It cannot be.
Absolutely. And I'm going to address one last question, and I think we can then call it a week, since this has been a very, very busy and event-packed week. And don't forget that second half of the Uruguay versus Egypt game starts shortly for friends that like actually soccer. Let me address one last question. There is a question if this can be in silver a triangle that actually is going to break in the direction of the previous trend, which is lower. Answer: yes, it can. But as I've said many times in the past, will I be selling a break lower? No, I won't. Why? Because my macro thesis is that silver is headed a lot higher. Does that mean that it can head lower first? Absolutely no. It can move lower first. But when I do something with silver, I want to be buying it. So if it breaks lower, this is going to be definitely a very serious technical event. Personally, I'm not going to be taking advantage of it to sell it. I would rather then use it to buy silver at more appealing prices. Okay, but yes, it can absolutely happen like that. So, Dale, it's your turn to wrap it up, mate. And thank you for having us for the whole week.
Okay, everyone. If you're alone and want a good place, you gotta hang out in phase. If you want to make some pips, hang out in phase and use your lips. If you want to be an ace, click your mouse in phase. Thank you, everybody. See you Monday. Have a great weekend. Don't just count your pips, count your blessings. Thank you, and sign up quickly before the prices go parabolic. Okay, see you guys. Thank you, Steve. Del, Blake, Grega, Andre, Joe, Amanda. Did I forget anybody?
My dogs, which keep barking.
Oh, Velu, who's on vacation. He's on a speaking tour right now. So I think that's it. You're welcome, Tom. Really appreciate your support, everybody. We're hope that we're adding value to what you're trying to accomplish in your trading life. Have a great weekend. Adios.